September is some of the craziest and most difficult times of year to trade. And in this video, I'm going to hopefully help to prepare you for this month so that you don't get caught in the crossfire. Check it out. Today's video is sponsored by the Market Countdown app. And if you haven't heard of it, it's a free tool for your computer that allows you to keep up to date with current market hours and whether or not a major session is occurring or not. If you've ever wondered why the markets quiet down or speed up, this is a good indicator for you. You can see the London and New York market icons here. This shows you when a market has opened, how long it's been open, or when it's going to open next. When the menu bar is grayed out, that just means that the market is closed. So now you know when it's open and when it's closed. This is great for people who are checking before they take trades to see if the markets are actually moving and if they should just skip a trade or potentially take one. And using the drop down here, clicking the settings gear, you can actually select other markets as well. Not to mention, they also have a really clean and easy to use economic calendar, which will show you upcoming events that could impact your next trade. If you hover over any specific news event, you can see when that news is going to occur, and that way you're better informed. Again, this is totally free to access, and down below in the description, there will be a link to that download. And again, thanks to Market Countdown for sponsoring today's video. Welcome back to another one of my videos, guys. Today we're talking about the month of September, the terrifying month that seems to be a terrible time in the markets. Well, let's talk about why is that, and more importantly, how can you and I potentially take advantage of what often happens in September? So the question of the day is, do you sell everything and walk away during September, or is there some opportunities? Let's jump in. Okay, so the first thing you need to know is there is a reason I'm making this video specifically about the month of September. September is seasonally a rough month for traders. Today, we'll take a look at how specifically traders can actually take advantage of the opportunities that sometimes present themselves. And I just want to warn you, you're going to want to stick around for this full video. So let me also, while you're at it, remind you to subscribe to the channel if you're new. Let's keep going. So first of all, what is seasonality? This is going to be key to answering the question that we're talking about. Seasonality is, of course, the study of average historical returns in a given month of the year, or a week of the month, or a day of the week. There's many different ways to kind of measure seasonality. So like another example is, for example, on an election year, is there a tendency in the market for something to happen? Seasonality is basically the study of patterns that are kind of recognizable in markets during certain events or times. In this video, we're going to focus mostly on the historical returns of certain markets that many of you guys and myself trade, things like the metals market or the commodities world, or currencies or indices. We're going to focus on some of those and take a closer look at what tends to happen in September so you're better informed as the month gets going. So first, let's take a look at the stock market. If you know, the indices are some of my favorite things to trade, and I'm going to be paying attention very closely to them as we go into September. So let's take a look at the data and see what it says. All right, guys, so we're over on the EDGEFINDER, and I've selected the seasonality page to take a look at month to month what historically tends to happen on some select assets. Now I've selected here in the drop down menu, I selected the S&P 500, but of course you can select all sorts of different things. We're going to dive into some of those as we get further into the video today. So I wanted to start with the S&P 500, and here's a couple things you need to know. The blue columns here represent the last 10 years of historical tendencies in the particular market that we've selected. The red shows kind of more recent performance, the last 5 years and on average, and the white line just shows what we have done historically, this year specifically relative to the historical tendencies. So again, we've got all the months of the years along the bottom of the screen, and when we take a closer look at September with the S&P 500 selected, you can see that it is one of, if not the worst historical average month for the S&P 500. So that's telling us the way to read this is that over the last 10 years, we've seen a minus 0.7% on average during the month of September. And the last 5 years, we've even seen a worse decline of minus 0.84%. So it's easy to say here after looking at this that historically, looking at the last 10 years, September has been a downer month, meaning, compared to like July and August, which have been historically pretty positive, we see September not so hot. lot. Now, seasonality, I should say, is not a magical holy grail. It doesn't necessarily mean that there's a guaranteed down market to occur during the month of September, but knowing this information can keep us a little bit more informed on what could happen. So that's the S&P 500. While we're at it, let's take a look at the NASDAQ 100, and you can actually see that it's pretty similar. So September is historically pretty negative for the NASDAQ, but also notice you can see in the last 5 years we've had a little bit of decline in the months of October as well. So something here to at least pay attention to. Let's see what's next. Now, of course, a lot of our audience here pays attention to the metals market. So I figured we'd take a second to take a look at historically what happens to gold during the month of September. Is this a good month for gold? Is this a bad month for gold? And which way should we possibly pay a little more attention to? Okay, so we're back on the EDGEFINDER and I've just selected gold, and you can see that gold does not actually tend to do very well during this time either. Noticeably, the stock market is down, but seems like gold has actually had an even rougher historical tendency during the month of September. So it's perhaps worthwhile thinking about being a little bit more cautious on the long side of gold, and maybe even more focused on selling gold during the month of September if you get some sort of setup that meets your criteria for a sell setup. So again, gold typically seems to do pretty poor in the month of September, and actually in October as well for that matter, and actually November. So coming into potentially a tough couple months here for the metal itself. Of course, another popular market for a lot of Forex traders is going to be the Japanese yen. And I want to take a look at this one as well to see historically, does this one typically do well or poorly during the month of September? And while we're at it, I'm just going to add in here that we'll also take a closer look at some US dollar pairs, because things get really heated once we start talking dollar. And just before we take a look at the dollar index data, I wanted to show you something really interesting. I've got the dollar index pulled up here, and what you can see is that even though we're coming into the end of August, the dollar index does look like it's already starting to fall apart. This upward trend that we had going on throughout pretty much all of August just got challenged and broke out lower. So it is possible that we may see more sell side coming on the USD. And again, this is where seasonality is important, because when I show this to you guys, this might offer a little bit of a new perspective. If you only looked at this chart, you might say, wow, the US dollar looks like it's gonna crash. But does the seasonal data hold up? Let's have a look. So after pulling up the USD/JPY, we can confirm that the dollar actually has the opposite. It actually has more strength likely to occur if we're looking at solely historical tendencies during the month of September. Look at this. The dollar yen typically is up during the month of September, October, and November. All three of these offer historically a really positive month in the markets. And so if we pay attention closely to this, what we could say is that, is it the yen that's weak, or is it the dollar that's strong during this time? And we can get a more full answer once we take a look at, for example, let's pull up Euro USD, if I can find it. Okay, so Euro USD, look at this, you guys. September is a terrible month for the euro dollar. Same with October and November. It does seem like it's the dollar strength, because again, when we're looking at EU, right, Euro USD, if we're saying the euro is down, that should mean that the dollar is strong. So we're seeing some dollar strength in the coming months. So perhaps you look at the dollar index that we pulled up here and you say, well, this thing looks like it's breaking down to the downside. Well, after looking at seasonal data, you may just want to be a bit careful, as it is possible that this thing could find support. And with that seasonal data, perhaps the dollar does start to make a move higher, or at the very least, maybe it starts to range bound and find a little bit of strength as we come into those later in the year months, September and October, notably. While we're at it, I figured we'd take a look at some other yen pairs that don't just involve the dollar. Here's Euro Japanese yen, which does actually see, generally speaking, a positive couple months here, starting in September and October. Now again, this is really key because this tells us kind of the general idea about what the euro yen might be likely to do if we're using historical data to help us build a picture. Let me also take a second, guys, to tell you a little bit about the sponsor of this video. The sponsor is our company here, A1 Trading, which builds tools for traders to help spot opportunities like the ones we're talking about in this video. If you'd like to get access to our software, which is called the EDGEFINDER, which I just showed you a second ago, it's our company's proprietary data tool for traders, and it helps traders find better setups each and every day. You can track seasonal data, the commitment of traders data, and economic data all from one portal that automatically pulls in all of your information, but it even does more than that. It takes into account all of this stuff and it actually generates output. I'll show you that real quick. So I've just navigated to the top setups chart and you can see this is showing us all of the different bullish and bearish signals or ideas that the EDGEFINDER is pulling together. We've focused a lot today on seasonality, which of course shows us seasonally what a particular asset may do during a certain month of the year, but the EDGEFINDER scores everything from COT data, retail sentiment, seasonal, trend readings, GDP growth, inflation, unemployment, and interest rates, and it combines them all to give us a score. And this, guys, is how I find all of my trades. I go to the software and I look for strong readings one way or the other, and then I look for technical setups that marry up with the EDGEFINDER's ideas. So as you can see, the EDGEFINDER basically automatically generates ideas and trade setups for me, and my watch list is pretty much generated by the time I get to my computer every day here at the office. And while you're watching this video, down below in the description, you can actually get access to our software if you've been a fan of the channel for a while and you'd like to take advantage of this huge discount that we're offering. Click the link at the very top of the description to message us right now, and you can actually get access to the tool for 35% off. This is a limited time offer, so make sure to act quickly if this is something you're interested in getting your hands on. We're celebrating a bunch of new features that we've added, and so the tool is currently very discounted. So clearly, seasonal data can be really, really powerful. But I actually have a friend who specializes in seasonality-based trading. His name is Eivind, and he had some really interesting ideas specifically to the yen pairs that I wanted to share with you guys here. So check out what Eivind had to say.
I do only yen, okay? And then USDN kind of goes in there, but I kind of don't like it because if you go back to when we're clear risk on, which is kind of what I'm trying to trade here, is that USDN trades like 5%. In the same time frame, Aussie yen do like 20, 30, 40 percent. So it's dramatically different. But the thing is, the reason why I need to watch it because Bank of Japan watches it. And a year ago, they intervened in the market around 150. 1, 2. So I need to be, if you go too fast to 152, I will be shaking in my pants. I'll probably run away because that might need to have another intervention because last year it went too fast, too quickly, and we are going up to the same price again. So that's the only reason why I need to watch USDN.
That's a good point though too, because again, the US and Japan, both really major economies, and the central bank, for people who are newer, perhaps they are not familiar with that concept, the Bank of Japan, they watch this currency exchange, as Eivind is pointing out, so importantly because, of course, so much global trade happens between these two currencies, right? So last year, we saw intervention from the Bank of Japan. They were like, we don't like this level, we're going to support our currency, and it's going to go back the other way. So it's almost like, Eivind, is there a good chance that perhaps we see the dollar yen come back to try that level out again? Perhaps there's a trade in the meantime, but the side caveat, the side note is be very careful because the second the Bank of Japan does step back in for intervention, that's where we see those 300 pip swings very, very quickly. So you got to be very careful with that stuff.
It was 400 pips the first time they tried on some of the pairs. But so the question last year was it was too quickly. Now we go maybe a bit slower. The other thing is they're threatened from February to September until actually did something. So every week they said we're going to intervene, we're going to intervene, we're going to intervene. So the problem is that Japan is the country that has the biggest cash reserve in dollar and bonds. So if dollar strengthens, their yen weakens, and the problem they have is that they are buying, for example, all their oil is import. They don't produce their own, so that becomes incredibly more expensive the more this one goes higher. So and also it's for business, it's not great to have this unstable price movement, even though it's one direction. So I kind of see what it would do, but I'm just don't do it now, don't do it now, don't do it now.
So now back to the video. I want to show you guys a little bit of the takeaway here. You've got Squidward here saying you lose. You don't want to end up looking like Squidward. 10 points for Gryffindor if anybody knows which episode this Squidward picture is from. I love SpongeBob and it was a hilarious episode, so props to you if you get it. Anyways, the question is, the takeaway is, should you just sell everything going into September? Obviously there's some bearish tendencies for things and it does seem like there's some dollar strength historically. Should you just sell anything? Should you just go all in on going long the USD? And should you mortgage your house? Let's just go ahead and say no, you shouldn't do any of those things. You should probably be smarter than that. Please don't, just because seasonal data shows you one thing, it does not guarantee that it's going to happen. But this is how I will actually use this information to impact my personal trading going into the month of September. I will be slightly less likely to buy indices in the short term, as we saw indices pretty weak during the month of September, at least historically. Second, I'll be slightly more long biased on the dollar, specifically things like shorting Euro USD, right? Shorting the Euro, buying the USD. And finally, I'll be slightly more bearish on the Japanese yen. Perhaps this means buying USD, selling JPY, so the dollar yen might be a currency pair that I'm watching going into the month of September and actually October for that matter. The point is, this is my game plan and how I personally will use this data to help me in my trading to perhaps find an edge, find a better setup here and there in the markets, and possibly even make some profit based on the historical tendencies of the month of September. I hope this video was helpful to you. If it was, remember to hit that thumbs up button down below and subscribe, and also remember you can get 35% off of our software. If that's something that would be interesting to you or helpful to you in your trading, I definitely encourage you to click the link down below, message us, find out more information, and get your hands on a copy of the tool. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.